Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous?
Hey, welcome to Modern Investing Techniques, episode 63. I'm Patrick in Vancouver. Today is June 2nd, 2026. Time to break down today's market setup and find our edge. Quick reminder, everything we discuss here is for education and entertainment. The practice investment of the day uses simulated trades with no real money. I'm not a licensed financial advisor, and this isn't financial advice. Always do your own research before putting real money to work. Canadian investors holding healthcare platforms now have a concrete acquisition catalyst to evaluate after Hims and Hers closed its Eucalyptus deal, accelerating generic semaglutide access and whole body care offerings north of the border. Markets opened with the S&P 500 at 7,599 flat. The NASDAQ Composite sits at 27,116 for a 0.1% gain. The TSX Composite reached 34,891 with a 0.4% advance. Sentiment stayed measured as Alphabet's drag offset broader AI infrastructure strength, while Canadian political commentary on economic weakness added domestic caution. 14 days ago, we picked HD on an earnings surprise entry after the beat and reaffirmed full-year guidance. It closed up 4.86%. Year-to-date moves for both the NASDAQ and our simulated portfolio are not available in today's data. Investors should watch whether today's volume confirms follow-through in AI-related names or signals a stall. The custom indexing approach Questrade just launched gives Canadian investors a way to build a fully personalized index portfolio without paying management fees. It combines the low-cost rules-based nature of indexing with the ability to exclude or overweight specific holdings to match tax, ESG, or sector preferences inside a TFSA or RRSP. In today's environment of concentrated AI leadership and Canadian economic uncertainty, this tool lets retail investors maintain broad market exposure while avoiding names that conflict with personal risk rules. Implementation starts by linking your Questrade account to the custom indexing interface, then selecting a base index, such as the S&P TSX 60. You apply up to 50 custom exclusions or tilts before the next rebalance. The strategy has historically worked best in sideways or mildly trending markets where fee drag compounds over multi-year holding periods. The main risk is over-customization that inadvertently increases tracking error beyond the investor's tolerance. If today's momentum strategy interests you, this platform is exactly how you would screen for setups that fit your personal constraints. This is a simulated trade for educational purposes only. No real money is involved, and this is not financial advice. Today's practice investment of the day is a weekly hold on Hims. The catalyst comes from completion of the Eucalyptus acquisition that adds Juniper's platform and accelerates generic semaglutide rollout to eligible Canadians. The stock is trading above its 50-day moving average, with volume still elevated from the announcement. Nearest support sits at the prior week's close, and resistance is near the post-deal high. Acquisition integration risk and potential regulatory scrutiny on telehealth expansion could pressure the name, so the stop loss is set 8% below entry. The target range is 4% to 8% over the 5-day hold window. Confidence is medium because the deal closes a clear geographic and product gap, yet healthcare platform multiples remain sensitive to broader risk sentiment. This trade demonstrates how to evaluate a completed acquisition as a catalyst rather than a rumor, forcing discipline around position sizing and stop placement even when the story feels positive. We separate headline completion from sustained volume confirmation before committing capital. The volume confirmation rule from our earlier SNSW trade applies directly here, so we wait for follow-through before sizing up. Last flash trade was on SNOW with a momentum entry on raised revenue forecast plus major AWS partnership. Entry came at $237 at market open, and exit occurred at $239.20 at market close. The position gained 0.93% for $9.28 on a $1,000 simulated stake. The trade gained 0.93%, while the NASDAQ gained 0.1% over the same one-day window, delivering 0.83% alpha. The modest single-day gain confirmed the partnership catalyst worked, but also showed how quickly momentum stalls without follow-through volume. This teaches us to always require volume confirmation above the 20-day average before entering momentum trades on partnership announcements. Questrade Custom Indexing lets Canadian investors create a fully personalized index portfolio with zero management fees by selecting a base index and applying up to 50 custom exclusions or tilts. The edge comes from avoiding fee drag while still capturing broad market beta inside a TFSA or RRSP, something previously available only through expensive, separately managed accounts. Any investor comfortable with basic index construction can use it directly inside their existing Questrade account at no extra cost. Robinhood has closed its purchase of WonderFi, giving Canadian users access to the same commission-free stock options and crypto trading interface already popular in the US. The platform's edge for active traders is real-time options chains and instant funding features that reduce friction compared with traditional Canadian brokerages. Canadian residents 18 and older with a valid SIN can open an account once the integration is complete later this year. NVIDIA's CEO publicly flagged Marvell as the next potential trillion-dollar chip name, sending shares up more than 24% in pre-market trading on Tuesday. The comment highlights continued AI infrastructure demand beyond the obvious leaders. Add MRVL to the AI semiconductor watch list and wait for a pullback to the 20-day moving average before considering any new position. Global oil inventories could reach critically low levels if current draw rates continue into the summer driving season, according to the IEA's oil markets head. The outlook adds a supply-side floor under energy prices, so trim energy exposure if crude closes below its 50-day moving average. Otherwise, hold existing positions through the summer window. The Canada Pension Plan Investment Board committed $474 million alongside a Korean manager to acquire hotel assets in Seoul. The move shows continued institutional appetite for real estate exposure outside North America, so review any international REIT holdings for geographic concentration and consider a small rebalance toward developed market real estate ETFs if current allocation exceeds 8%. The White House updated Section 232 tariffs on select aluminum, steel, and copper imports, potentially altering input costs for manufacturers and commodity producers. The change introduces a new variable for industrial supply chains, so hold CAD cash with no rotation signal yet. Our simulated portfolio across 29 trades shows a 62% win rate with 18 wins, 10 losses, and 1 break-even. Cumulative profit and loss stands at $416.37, with an average return per trade of 1.44%. The best trade reached 20.11%, while the worst came in at negative 11.35%, and the current streak is 2 wins. Our AI analysis is learning from volume patterns and adjusting position sizing rules accordingly. Now here's something that most retail investors get wrong, and it cost me money before I figured it out. Imagine you bought HPE shares yesterday morning after the earnings release when the stock was already up 20% pre-market. Your market order filled at the quoted price, but the actual execution landed 3 cents worse than the last traded price shown on your screen. The mechanism is straightforward. When retail flow hits a thinly traded name during a catalyst spike, market makers widen the spread and absorb the imbalance, so the effective fill price moves against you by the amount of that widening, often 5 to 15 cents on a fast-moving stock. What most retail investors do not realize is that the displayed bid-ask quote is only the top of the book. The next levels can be much thinner, and a single large order can walk the book several cents in seconds. The professionals always check level 2 depth and average daily volume before sizing a momentum trade, then use limit orders or iceberg orders to avoid telegraphing size. The biggest mistake with order flow is assuming the quoted price is the price you will receive. Instead, always size positions so that even a 0.3% slippage hit still leaves a trade inside your risk budget. Open your brokerage platform, pull up the 30-day options chain on one healthcare name you already own or are watching, and calculate the annualized yield of the at-the-money covered call. Note whether that yield exceeds your target annual return. If it does, add the name to a shortlist for next week's potential income overlay. Before we wrap, keep an eye on volume patterns in AI infrastructure names for tomorrow's open. That wraps up today's modern investing techniques. Remember, every trade is a learning opportunity, win or lose. Subscribe, share with a friend who wants to invest smarter, and we'll see you tomorrow. And before you go, this show is part of the NARA Network, a family of daily podcasts covering tech, science, markets, and more. If you enjoyed today's episode, give Tesla Shorts Time a listen, your daily deep dive into everything Tesla. You can explore the whole lineup at naranetwork.com. This episode used AI voice synthesis of my voice. Editorial selection and analysis are my own.
Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous? Do you ever stay awake, counting sheep like all the time? What's your life like? What's your purpose? When's your birthday? What's your sign? Are you down right now? Are you stuck up in the past? Are you still thinking about all the times that you did